All right, today we're going to dig into the financials of a company that's pretty much at the heart of Singapore's skyline, HG Metal Manufacturing. Their latest report tells a really interesting story. It's this tale of a local boom going up against a global slowdown. So let's get right into it. So, what's the headline here? Well, it's this constant push and pull. On one side, you've got a flood of cheap steel hitting the global market, and that's pushing prices way down. But then, right here in Singapore, you've got this massive construction boom that's keeping demand super high. This tension, it's the key to understanding everything about HG Metal right now.
So to really get a handle on all this, here's how we'll break it down. First, we'll look at the raw numbers, the performance snapshot. Then we'll unpack how they're pulling this off with their strategy. After that, we'll look ahead at the future market. And finally, we'll wrap it all up with the key takeaways for anyone keeping an eye on this company.
Okay, let's dive into the numbers. But hang on, there's one really important thing you need to know first. HG Metal actually changed their financial calendar, so the period we're about to look at, it's only 9 months long, not a full year. You gotta keep that in mind as we go through these figures, because it changes how we see everything. So, for these 9 months, revenue clocked in at 130.3 million Singapore dollars. Now, if you just compare that to the last full year, yeah, it looks like a 17% drop. But that's a bit misleading. Remember, it's a shorter period, and global steel prices have been falling. So of course the total revenue is going to be lower. This is pretty much what everyone expected. Okay, now this is where the story gets really interesting. Forget the total revenue for just a second and look at this. The gross profit margin. It actually went up. So even though they were bringing in less money overall, they were squeezing more profit out of every single sale. That is a huge sign of some seriously smart cost control and efficiency. And that really tells you the whole story right there. If you look at it on an annualized basis, the business is actually getting more profitable. We're talking a net profit of $7.3 million in just 9 months. So you can't be fooled by that lower revenue number on the surface. Underneath it all, the engine is running stronger than before. So that leads to the obvious question, right? How are they doing this? How are they managing to improve profits when the global market is so tough? Well, it's not just luck. It's a mix of their built-in strengths and some really smart, deliberate moves they're making right now. First off, let's talk about their foundations. I mean, they've been around for 50 years, so they have a trusted name. But it's way more than that. They're a one-stop shop. They can source steel from literally anywhere, customize it, and store it in their massive warehouse. Plus, with over 1,500 clients, they are not putting all their eggs in one basket. This is their strategic toolkit, right here. And here's how they're putting that toolkit to work. First, they're being incredibly nimble with how they buy steel, getting only what they need right when they need it. That way they don't get burned by falling prices. They're also smartly focusing on stable government projects. And, maybe most importantly, they're locking in long-term contracts. See, this isn't just about playing defense. It's about building a predictable future. This is what resilience looks like on a balance sheet. Okay, so we've seen how they're performing and the strategy that's getting them there. Now let's pivot and look to the future. And what we see is really a tale of two powerful opposing forces. On one side, you have this massive opportunity right here at home. I mean, Singapore is in the middle of a construction boom that looks like it's going to last for years. We're talking huge projects like Changi's Terminal 5 and new MRT lines. That is a powerful tailwind pushing them forward. But on the other side, you have this huge global headwind. China isn't building as much, so there's a glut of steel on the market, which keeps prices low. That's the tightrope they have to walk. All right, let's pull all of this together. So what's the bottom line? What are the key things you really need to know about where HG Metal stands right now? First, you gotta remember, this isn't some startup. They're a 50-year-old market leader, a trusted name on all the big projects fueling Singapore's growth. Their finances are solid. We saw that in their improving margins, and they're sitting on a healthy 68.5 million in cash. They're not just standing still either. They're actively adapting their strategy. So in short, they seem perfectly placed to catch this massive wave of local construction. And so, it all comes down to this one big question. HG Metal has built this incredible fortress in its home market, fueled by Singapore's building boom. But outside those walls, the storms of the global steel market are raging. Is that local fortress strong enough to withstand the global storm? The answer to that is what's going to determine their entire future.